You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of liftoff. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials. But really, the first two might be.
You mentioned a few locations that might be most affected. Indeed, however, if you had to rank the top 3 sources of activity or juice that you believe the Fed could tap into if it were to follow this course, could you walk us through them? Perhaps home builders come to mind. Based on valuations, I consider other market segments, such as technology. However, which locations do you believe will benefit the most from that? Yes, because the Fed was on a long pause and made cuts in September of 1998 and 2024. Respectively, I'm using those 2 months as a model. The NASDAQ 100 is the most traded. That, in my opinion, explains why the AI trade and the MAG 7 are so popular. The second is global central banks easing and monetary liquidity sensitivity. That's seasonally strong for both Ethereum and Bitcoin. In the next 3 months, I believe they could make a huge move. Naturally, interest rate sensitive individuals make up the third. The financials and caps are extremely small. The first two, however, may be the most notable trades. Okay, what if you had a warning from your desk before your retirement was erased? Your retirement account could be wiped out overnight if you don't purchase this product. Because there are only 100 pieces available, order yours right away using the link below. The President of the United States and Jensen Huang are expected to have a crucial discussion because China is once again pushing back the development of a chip that was intended for its market. Yes, Carol, you're correct. And since President Donald Trump took office in January, Jensen Huang has been speaking with him about that. When it comes to export controls, Jensen has been working to change the situation so that Nvidia benefits a little more. The U.S. has restricted China's access to Nvidia's most cutting-edge AI chips over the last few years, and they recently regained the right to sell the H20 in China. However, China is now objecting to that. However, this most recent development indicates that China is stepping up its pressure campaign, and they believe they have some clout there because local Chinese semiconductor manufacturers can now compete with some of those lower-quality, lower-performing AI chips from Nvidia. Nvidia now wants to sell something that is possibly a bit more sophisticated than that, but they would need President Donald Trump's support for that. In order to address a number of issues, we will need to keep an eye on both the more crucial conversation between President Trump and his Chinese counterpart Xi Jinping on Friday, Carol, as well as any discussions that may occur between Jensen, Huang, and Trump. Although we are all aware of TikTok, Nvidia is now a topic that they will talk about. This would be an opportunity to resolve all of China's grievances regarding export restrictions, including those involving Nvidia. I want to move on to another story that we are keeping a close eye on, which is the ongoing U.S.-China negotiations, in which Nvidia is a pawn in the middle. As we discussed, China has told its companies not to purchase Nvidia chips, according to the FT, after the company's earnings. I recently had the opportunity to speak with Jensen Huang, the CEO of Nvidia, and I asked him how important China is to the company. What he said was this: all American technology companies should have branches in China. This market is significant. Additionally, as you are aware, it is simply very big. It is the world's second largest market for computers. It's important that America wins the AI race, especially at this time when AI is taking off. So I'm just thrilled that President Trump recognizes the value of American leadership. However, as you are aware, the shares are down a little over 1% this morning. However, investors don't appear to be particularly worried. For instance, the shares have increased by 30% so far this year, correct. Although it is not the most significant market, China is a significant one for Nvidia. Demand is undoubtedly high in the United States as well. However, this is a major escalation. Regulators have previously targeted the H20 chips made by Nvidia. The purpose of those pared-down processors was to adhere to those U.S. export regulations. Now, the RTX Pro 6 SUSU is covered by the directive. That's Nvidia's latest AI chip, a scaled-down variant of its flagship processor designed to adhere to the same regulations and tailored for China. However, the timing is noteworthy as well. China accused Nvidia of breaking its anti-monopoly law only a few days ago. This occurs as President Trump keeps promoting laws that limit China's imports of American chips. For the same reasons, China is attempting to reduce its reliance on U.S. technologies. Additionally, shares are down a little in pre-market trading. As you mentioned, Jensen Huang, the CEO of Nvidia, did respond to this report. He expressed disappointment, but acknowledged that the U.S. and China have more significant geopolitical problems to resolve. He characterized Nvidia's operations in China as somewhat unpredictable and emphasized that, due to policy uncertainty, the company has advised Wall Street not to include China in its financial projections. And since the latest quarter's guidance wasn't too bad, even without China, that might be the reason for the somewhat more subdued response in shares. Therefore, if this China issue is settled, Nvidia may benefit even more in the future. However, as you pointed out, Nvidia is once more a pawn in the ongoing trade talks between the U.S. and China. On Friday, President Trump and Xi Jinping will meet. This will undoubtedly be a hot topic of conversation. Yes, and I'm interested to know what you think about investing in AI right now. David, sort of the way you're thinking about it, the scope of your thinking. It's clear that this is one of the most significant trends we've seen, and it's probably going to be very resilient over the course of the next 10 or more decades. Therefore, we are looking for businesses that can consistently profit from that trend. Thus, Arista Networks is among the stocks we have been considering, because Nvidia is enabling networking in AI and the cloud through both software and hardware networking. It moves almost in lockstep with the company's expansion into AI. Additionally, the company's top-line revenue has increased by roughly 30% over the previous year. Like Nvidia, its margins are extremely strong. However, the political climate surrounding Arista is not as bad as it is for some names, such as Nvidia. Additionally, when the growth slows, the software revenue they are likely to produce is far more sustainable than the revenue from pure hardware. Lastly, let's discuss President Trump's trip to the United Kingdom. There is a lot of fanfare surrounding his arrival, not only from local officials, royalty, etc., but also from businesses that are forming alliances there. That's correct, Ramzan. Despite the flurry of pageantry, it's worth noting that President Trump is actually in Windsor, not London. There have also been protests, but he has been joined by a number of prominent figures in the U.S. technology industry, including Microsoft's Satya Nadella and Nvidia's Jensen Huang. The two nations have also reached an agreement known as the Tech Prosperity Deal, which is estimated to be worth approximately $42 billion. Among the promised investments is Microsoft's announcement that it will invest approximately $30 billion to expand cloud and AI infrastructure in the United Kingdom. Google has committed to spending nearly $7 billion on AI research and a new data center. Nvidia announced plans to roll out 120,000 cutting-edge chips nationwide. Hence, the UK has seen significant US investment. Salesforce has also announced plans to invest CoreWave as well. The UK will benefit from that, but what about the US? Conversely, the British pharmaceutical company GSK announced that it will spend about $30 billion over the next 5 years on supply chain infrastructure and research and development in the United States. Now, keep in mind that President Trump has threatened to impose 200% tariffs on these pharmaceutical companies at some point, which has made the industry somewhat of a hot topic. In order to avoid that, many businesses are already investing in the UK. That's a really intriguing perspective. Another interesting development in the tech sector is that the UK could see a sizable investment due to the somewhat tense relationship with US tech companies and European regulators across the channel. Additionally, President Trump has frequently attacked the EU for harming US tech companies. Perhaps visiting the UK is one way to demonstrate that, in reality, you are not needed. We can travel to the UK and achieve the same level of prosperity there. Yes, the UK is also in dire need of this investment. In the 3 months leading up to July, the UK's GDP grew by a meager 0.2%. As a result, the economy isn't exactly booming. Thus, this investment will be greatly appreciated in the United Kingdom. If you own Nvidia without a plan, you could jeopardize your retirement. Protect my Patreon by joining it.